Monday, September 9th, 2019, Maneco 64, home of alternative economics and contrarian views. This morning I want to talk about whether central banks and central bankers are driving themselves out of business with their IOU nothings, with their policy of printing and creating more and more IOU nothings out of thin air. And what are IOU nothings? Well, that's the money that we use today. And I'm going to reference John Exter for that. One of his essays he wrote in 1972. John Exter, of course, is famous for his theory of the inverted pyramid. I won't touch into that. I want to look more into the IOU nothing this morning, mainly because we've got the ECB this week on Thursday. Mario Draghi, I think it's his last meeting as president of the ECB. He's leaving on the 31st of October, like Brexit Day. It's weird, isn't it? And so it's his last meeting. The market is expecting him to give him a lot of goodies in terms of more and more free money, lower and lower rates, more liquidity. They might be disappointed. We've seen some more hawkish central bankers in the EU, Eurozone lately, the German and the Austrian central bankers saying that we don't need any more stimulus right now. Why would they do that? Well, mainly because if you look back at history, those two countries experienced a hyperinflation less than 100 years ago. So they know what happens when you start monetizing debt, which is what the central bankers have been doing since 2008. So I'll look into that in an article as well. Quickly look at an article in the FT by someone called Gavin Davis, and I'll quickly go over who that guy is. Before that, of course, I'm going to look at where the markets are this morning. It's just a couple of minutes before 8 o'clock in London here, 8 a.m. So let's have a look. Spot gold, 1508.71. It's up about $2. Range has been 1502 to 1512.90. Silver is underperforming a little bit here. It's at 1804, down 12 cents. Range has been 1792 to 1832. So it's actually been quite higher than where we are right now. Silver. The Dow future is up 60 points, 24. The Dow future is up 60 points, 26,850, or just under 1/4%. S&P 500 is up 8 as well, 1/4%. NASDAQ 100 future up 16, up 0.2%. So yeah, stock market slightly firmer this morning. British pound is a little weaker. It's down 1/4% at 122.60 against the dollar. The euro is unchanged, 110.28. Dollar is unchanged against the yen, 106.92. Dollar's also up, actually, 1/3% against the Chinese currency at 713.08. WTI crude up 1.3% this morning, 57.14. It's been a while since we'd seen a 57 handle. So crude oil higher. Brent as well up just over 1%, almost up to 62. It's 61.88. Bond markets, quickly have a look at the bond markets. Bond yields are continuing to rise a bit here. The 10-year yield is at 157, up 2 basis points. The 2-year yield is at 154. So the curve has disinverted for now. I'm not sure if we are out of the woods in terms of falling interest rates. Right now it looks like we're having a little bit of what people call a risk-on effect. People are getting back into the stock market, getting out of government bonds, at least U.S. government bonds. European government bonds, that's another story, and I think it would be very important, of course, Thursday. So, John Exter, I won't go over who he is. I've done it other times, other videos, and I just want to go through his IOU nothings, and I'm going to reference one of his articles. If you want to find out more about John Exter, it's E-X-T-E-R. Just Google and there's a Wikipedia on him. So this article here from 1972 says, Currencies Today Are IOU Nothings by John Exter, published by the American Institute for Economic Research. So I'll go through here a scarce commodity. This is what he says. If we carefully look into the meaning of this market churning, it becomes clear that store value money, if it is to endure, must be a commodity, and a scarce commodity too. Silver has long been a less satisfactory store value money than gold, principally because it has been and promises to continue to be more abundant. Many of the currencies used as means of payment and standard of value money have not proved good store of value money, chiefly because they too have grown too abundant. That's what it's about, abundance. Since they are simply either paper, currency notes, or bookkeeping entries, deposits, promises to pay, i.e. debt obligations or IOUs, the confidence of people in them as store of value money depends heavily upon the ability of the central banks responsible for their issuance to honor those promises to pay in a commodity that is indeed store of value money. This is the issue of convertibility, which the Europeans, especially the French, are emphasizing today. Well, that's too bad that nowadays no one is emphasizing that. Until March 1968, when the two-tier gold system was established, the central banks issuing all major currencies were promising all holders IOU gold at $35 an ounce. That's the Bretton Woods system. Under the two-tier system, however, the IOU gold promise was abrogated for private people, and except for the South African Reserve Bank, central banks refused to sell any gold at any price to private people. The IOU gold at $35 an ounce promise was honored only among central banks and governments, and even among them it became gradually more tenuous. On August 15, 1971, the IOU gold promise was abrogated even among central banks. So that's how it's been since then. He continues, some relative rates. So today all currencies in the world are saying, I do not owe anybody anything. Each one says, in effect, I owe you nothing in the way of any commodity that is a store of value money. In that situation, an attempt was made at the Smithsonian to reestablish fixed exchange rates, which meant making one central bank's IOU nothing equal to a certain number of another central bank's IOU nothings. It's crazy, right? That's what we still got now, with a 2.25% spread on either side of parity. It is obvious that such an arrangement could only last if the exchange rates agreed on at the time were equilibrium rates, and if in future all central banks agreed to control the issue of their IOU nothings at the same relative rates. The second condition was certainly not met, and no one can be sure the first one was. I continue. Although it was agreed to raise the price of store value money, gold, to $38 per troy ounce, no arrangement was made for a central bank that went into deficit because it issued too many IOU nothings to pay a surplus central bank in gold at a fixed rate. Meanwhile, the gold owned by central banks remained for the most part buried inactive in their vaults. Gresham's law has worked. Bad money has driven good out of circulation. Even among central banks, all currencies are inconvertible into gold. We are in a world of irredeemable paper money. This is the interesting part here we're coming to. Just bear with me. Further conclusions follow from this analysis. Good store value money, commodity money, gold and silver, is clearly the strongest kind of money. I owe you nothing money, which people may continue to hold as a store of value for a long time, but only with the enticement of ever higher rates of interest may continue also for a long time to serve as a means of payment and standard of value. But as it becomes more abundant, it will serve these functions less and less satisfactorily. If too abundant, not at all. It would then also cease being held as a store of value, not worth a continental. History is full of examples of IOU nothing currencies that have disappeared. Some currencies will, of course, become overabundant faster than others. Over time, it is scarce store of value money like gold that endures. And now the interesting part that's to do with the theme of this video, whether the central bankers are actually driving themselves out of business with the policies that they've enacted the last 15, 20 years of ever decreasing interest rates. And it's not the market that's driving interest rates lower, it's the central banks, because they're manipulating the markets. They're printing money to manipulate interest rates. So this is it. If enduring store value money must be a commodity, it follows that governments and central banks cannot create it unless they were to go, let us say, into the gold mining business. It follows also that if they persist in creating IOU nothing money, they will slowly but surely run themselves out of the money-making business altogether and have to start over again. Well, they don't like competition. They're not really in the business, are they? If they really, central bankers were actually in free market business, they wouldn't, they'd have to compete with everyone, right? A free market. To end this here, this is what he says. So it is also apparent and at the same time reassuring that it is private people in the marketplace, not governments, who decide what money is and what kinds of money they're going to use and hold, especially the enduring store of value money, the most important of all. So that's what I'm saying. Central bankers, the Fed, ECB, Bank of Japan, BOE, the Nordic central banks, they're going crazy. They're like following this policy where they eventually are going to destroy their IOU nothing currencies or money. And they're going to have to rethink things. Hopefully the general public won't buy into it and will go to private money, marketplace money, like John Exter says. But I'm not too sure. At least you as an individual can have your own commodity money. It's simple. It's common sense. You buy precious metals. You exchange the IOU nothings for precious metals. Some people say, oh, how do I pay taxes? Well, I'm talking about after you've done everything that you have to do in your country, that you follow the rules of the game. If you have this extra IOU nothing, don't hold on to it. That's what I'm trying to say. So recommend you go and look on Wikipedia who John Exter is, by the way. So now I want to talk about quickly, very quickly, because I don't want to go on forever in this video, because the ECB is a key meeting on Thursday, September 12th. Markets are expecting Mario Draghi, who's leaving October 31st, to announce loads of more policies to inflate the system, more and more of the same, right? And there's an article here by Gavin Davis in the FT. So who's Gavin Davis? Well, he, surprise, surprise, he's a former Goldman Sachs partner. He was also chairman of the BBC from 2001, 2004. He's a friend of Gordon Brown, the man who sold half of the UK's gold, right? So he's written this article here. It says Mario Draghi prepared to pass on the baton at the ECB. Governor leaves behind a battery of monetary weapons that are now misfiring. So he's kind of critical of what the central banks have done, but at the same time he talks about what they could do. But he never asks the question, do we really need these central banks? And so this is the kind of stuff we get, you see, from the mainstream. They're not questioning what the central bankers are doing. So what does he say at the end here? He says, the new broom. Christine Lagarde's evidence to the European Parliament last week suggests the incoming president will be happy with Mr. Draghi's modest parting gift. The economy may be sluggish, but it is not facing an imminent crisis. She firmly supported the need for highly accommodative monetary policy, but also warned that the impact of unconventional policies on financial stability would need to be examined carefully. What does that mean, really? It's like saying one thing and saying something else. That's, they're really losing it. And said that fiscal policy needs to play a more proactive role. Well, fiscal policy has got nothing to do with central banks, right? She clearly knows that she will face a severe challenge in a recession if a recession occurs on her watch. The ECB may have many shiny monetary weapons at its disposal, but their effectiveness is in doubt, and their side effects are becoming a constraint. In short, the ECB is beginning to resemble the Bank of Japan. So why doesn't he say central banking is becoming ineffective, right? That's so there you have it, Gavin Davis. But that's the kind of stuff they write in the FT. I made some comments in the comment section about, let's hope they drive themselves out of business, the central banks. And of course, some of the responses are saying, what are you saying? You're crazy. Difficult to explain to these people who don't think outside the box. There you go. Let's hope they do drive themselves out of business, never to come back. But I wouldn't hold my breath. So you need to be your own central banker, right? Have your own commodity money and look after your pennies. If you enjoyed this video, make sure you hit the like button. Subscribe to the channel if you haven't yet. Make sure you hit that little notification bell above to be notified of all my new videos in the future. You can also follow me on Twitter, Steemit, and on DTube. I wish you all a great day. Take care. Bye.